Nobody is talking about this, but Washington has already crossed a line the rest of the nation hasn't reached yet. Inventory in this state is rising faster than demand can absorb, and the break point is much closer than anyone realizes. But that's not the shocking part. Headlines still claim we're living through a housing shortage, but the raw numbers reveal a different story. Homes are sitting longer. Listings are piling up. Prices are stalling, and the media has not connected the dots. And when you see why, everything changes. Across the U.S., active listings are up more than 15% year over year. Homes take around 63 days to sell. Roughly 1 in 5 listings cut their price. And even as mortgage rates fall toward the low sixes, buyers are not coming back. This should be the moment demand surges. But instead, national demand is flatlining. That imbalance, more supply without more demand, is exactly what Washington is amplifying. And here's where the shock begins. Washington is not matching the national trend. It is leading it. The West Coast has entered a different phase, one the rest of the country hasn't recognized yet. Inventory is rising faster. Homes are selling slower than they did before the pandemic, and prices are holding, but not for the reasons people think. Price stability is not strength. It is the calm before sellers adjust. Migration adds another layer. Texas, Florida, and Arizona continue pulling demand away with lower costs and better affordability. Washington did not lose interest overnight. It redistributed. And that is the setup for the reveal that changes everything. Here's the suppressed truth nobody is reporting. Washington now has more inventory than it did before the pandemic. While national supply remains below 2019 levels, Washington has already moved beyond them. And the reason why is the real warning. Active listings in Washington are up more than 13% compared to last year. But new listings are down. That means the surge is not being driven by sellers rushing to list. It is being driven by homes that simply are not selling. It looks like a supply increase, but it is actually a demand shortfall. Are homes sitting longer in your area? Comment your city and ZIP code below. Time on market tells the same story. Washington's median time to sell has jumped from the low 40s to nearly 60 days in just a few months. Even the metros that look competitive on the surface are slowing beneath the data. And it becomes even clearer when we zoom into the metros. Let's zoom into the cities, because each metro is telling a different part of the same reversal. Seattle looks strong at first glance. Prices are up a few percent. Homes sell in 2 to 3 weeks. Competition still exists. But when you zoom out to the full metro, the picture changes. Metro-wide days on market have risen into the 40s and are still climbing. Inventory is building fastest in price tiers that historically lead downturns. Seattle is behaving like the early stage of a rebalancing. It looks harmless until it isn't. And Seattle is not the only market showing this pattern. Tacoma appears red hot. Prices up around 3%. Homes selling in under 3 weeks. Bidding wars still appear. But sales volume is falling. A market that rises while sales shrink is not strong. It is fragile. If you're in Tacoma, are you noticing fewer showings or fewer offers? Let me know what you're seeing on the ground in the comments. Spokane tells the opposite story. Prices have flattened or dipped. Competition is fading. Days on market are rising month after month. This is not a crash. Spokane is simply normalizing faster. And that may be a preview of what spreads westward. When you align Seattle, Tacoma, and Spokane side by side, the pattern becomes undeniable. Washington is softening in 3 different ways, for the same underlying reason. Here is the suppressed truth Washington sellers are not being told. Inventory is rising faster than demand in every major metro across the state. Time on market is increasing even in the hot areas. Prices are flat only because sellers have not adjusted yet, and the signals Washington is flashing match the early warning signs that cities like Austin and Denver showed before shifting into buyers' markets. What looks stable is actually unstable. Over the next 3 months, expect inventory to remain elevated or edge even higher. Expect demand to stay cautious even with slightly lower mortgage rates. Expect more sellers to test price cuts, especially in older listings and stretched suburbs. 6 months from now, as spring listings return, Washington could shift into a truly balanced market. More homes on the market, more choices for buyers, and less power for sellers to dictate terms. And that is the moment when the adjustment tends to accelerate. 12 months from today, some suburbs and pandemic boom pockets may face 5 to 10% price declines. The core Seattle market may remain flat in price, but far more volatile, especially if tech employment stumbles. Which Washington market do you think is most vulnerable? Seattle, Tacoma, Spokane, or somewhere else? Drop your prediction in the comments. The headline says inventory is rising, but the truth is, inventory is rising because demand is weakening. This is not just a supply surge, it is a confidence problem. Buyers are cautious, sellers are anchored to yesterday's prices. In the middle, the actual market has frozen. When supply rises faster than demand and prices stay flat, markets rarely glide down gently. They lurch. And right now, Washington is lined up for one of those lurches. What happens next depends on whether demand returns. If confidence improves, the state may experience a mild, grinding correction. If demand stays soft while supply continues to build, the adjustment becomes sharper. This is the real story of 2025 for Washington. Not a shortage, but a silent supply wave unfolding in real time. Comment your city and Zeta IP code below. Your market might be the next deep dive on this channel. Subscribe for market alerts and upcoming regional breakdowns.